On this channel, I've case studied quite a lot of winning trades that I've taken, but until now, I haven't really case studied any losses. But there's a lot of information that you can take from losing positions to improve and make better trades and decisions in the future. So in this video, we're going to be looking at 3 losses from 2024, pretty much picked at random just to show you different types of losses. We're going to look at what I did wrong, what I could have done better, and how we can avoid these losses in the future, and how to take lessons from every loss that you take as a whole. So let's get into it. The first trade to look back on is a long that I took on gold. So taking a look at the chart here, we can see that the market is predominantly moving to the downside, but we did have some open space in towards this area of supply. So just at the top of this large bearish move, we saw that there was still some imbalance left open above this swing high just here. So I was looking for some potential opportunity now that the market had pulled back to long towards this area of supply. Now, I was only going to do this if we saw a significant reaction from an area of demand. My overall predominant idea, if we jump it up to the 4-hour time frame, was because the market was at the moment still formulating a higher low. I expected it was likely that before selling off, the market would drive higher, trade into this area of supply, and then we could potentially look for shorts from there. So that was my general idea for gold. And then the secondary idea was, of course, if we pushed up and broke through the high, then we could look for some kind of reaccumulation and then continue buying, okay? So realistically, I just saw this as a magnet area for price that I was interested in leading price towards into for an opportunity to take a trade. So taking a look at this lower time frame, the hourly here, we can see just underneath this swing low, which I see as a bit of an inducement, we have an area of demand. This tiny little candle here, let me zoom in on it. This little candle here has kicked off a bullish movement. And between the actual, what I would classify as the demand zone, so the last candle before the impulse, and this wick just here, we have some imbalance left open. And we can see that this low here wasn't retested at this point either. Now, I don't trade from inside of imbalances, but I do trade from supply and demand zones once imbalances are filled. So if we pull this demand zone tool across, we can see that just underneath this low here, we've got a bit of imbalance and a clear demand zone. We can see previous to that, this demand zone is efficient. So basically what that means is this small gray candle, which is the last candle before the impulse, we pushed away from that point with this drive up, and then the market pulled back and retested it with this wick that we can see just here. Okay, so taking a look at that, it's this wick retest that actually creates efficiency and means this market isn't inefficient. If we then take a look back over here, we see the same thing. This demand zone, so the actual start of this bullish move, had been retested with this wick, which means that this range from this low up to pretty much this point here is efficient. Okay, every time you've had a push away, the market's pulled back and retested the demand zone. The inefficiency was created at this demand zone, which is the one that we're currently looking at for potential long opportunities. So if we scale the market forward then, we'll go down to the 15-minute time frame. We saw the market came into this demand and then very quickly had a bullish push to the upside. So this push, I saw, okay, we've had a closure above this previous structural high there. We've got 1, 2, 3, 4 previous candles engulfed with this one bullish candle. When we started to see the market push away, I actually looked for long opportunities, right? So I took longs here as what I would classify as a risk entry, also a bit of a momentum entry to take the market higher, okay? So I can't remember exactly what my entry was. It's going to be somewhere in there. My stop was just under the low, so my entry is going to be somewhere within one of these candles. I believe it was directly on this one here. And then the target was up towards this high, right? So as we can see, this trade was executed and started out with an immediate bullish push. But very, very quickly, we had a sell-off which drove us back to the downside. Now, in hindsight, obviously, being able to see what's happened in the market now, I know where I went wrong with this trade. This trade potentially could have been, and most likely was, a little bit of a FOMO trade, fear of missing out. So this was a mistake trade. Now, some losses are going to be entirely reasonable and within the confines of your system. A lot of losses I take are not due to mistakes. They are just simply due to the fact that this trade didn't work out this time. But what I want to cover here is obviously on the 4 hour, realistically, from pretty much up here all the way down to here, the market is just in a range. We don't really have a clear trend. And if we take a look at the lower trend here, the lower time frame trend, we are actually bearish. Now, because of the way that I trade, I will be anticipating imbalance fills the majority of the time. So I don't think that this was a bad trade opportunity, because I've taken many trades like this that have won. I take trades like this quite often that will win, that ideally may look counter trend on the bigger picture, but will actually provide positive opportunities. Now, the reason I think this is a mistake trade, well, I know this is a mistake trade, is because by my own rules, I want to wait for breaks of structure. We found the setup here around the hourly time frame. The demand zones and hourly demand, the swing lows, the swing highs, the imbalances, the high time frame supply target, this is all hourly. Yet, my entry was taken before any hourly structure was broken, right? As you can see, taking a look on the hourly here, it's so obvious why this trade lost. Because we have a supply zone, just there. The market traded into that supply, wicked straight out of it, massive amount of new selling pressure came in and the market broke down into new lows. So I took a completely avoidable loss here that shouldn't have been taken in the first place. Now, because we have this area of supply above, we still have that imbalance and the market is clearly downtrending here. I got too carried away on this position by the fact we'd seen a very bullish push from this area of demand. And we did see a pretty solid 15-minute break of structure, which does lead us to believe that yes, the market can trade higher. But this is a 15-minute break. And when we view it on the hourly, such as we are now, there's absolutely nothing here that tells me the market should be going up. What is it that would have actually told me the market is ready to start moving higher? Well, that would have been a break above the supply zone that actually caused us to lose. So if this high just here would have broken, that would have actually changed the flow of the current market trend, right? This is what we see right now. If we'd have had this break pushing above that high, then pullback buy opportunities would have 100% been valid. We could have got these break even. We could have ran these towards previous swing highs. So at least getting to here, at least getting up to this point most likely, and then with the extension potential through the swing high and into supply. But we didn't get the break, so I shouldn't have taken the trade, okay? Now this is where we can learn from losses, because as I've said, a lot of losses will be systematic, but this one simply wasn't. And realistically, there's no excuse to take a trade like this when I'm FOMOing in on the low time frames. And in the moment, look, I'm not panic buying. I'm not thinking I'm going to miss this move, but my mind was obviously just clouded and focused too much on that lower time frame move, the 15-minute. This is why I always say, please try to focus on relevant time frames. If you find a trade on the hourly, wait for an hourly break, because if you don't get an hourly break and you only have a 15, well, now you're actually trading against the larger trend, against the trend that you actually found the trade on, right? So we would have needed to see, instead of what we did see, a push and break above, and then I would have been happy to buy. And had this trade lost, this would have been a routine systematic loss. This would have been completely fine. But the odds of it winning would have been massively increased, because we'd have seen, okay, yes, this demand is reacting. We have seen massive buying pressure. We've now seen this hourly trend breaking. So yeah, we likely can take this higher, at least towards previous swing highs, potentially all the way through to our larger target. But because we didn't get the break, because the market just sold from supply, there was no reason that I should have had any orders active until we had at least crossed this line. So I got in too soon, and that was the reason for this loss. This loss was on EURUSD. This was actually a very obvious loss, okay? This was one that was coming off the back of a very hot streak. I'd taken 3 back-to-back wins. They were very big wins. I think I got a bit too cocky. Now, the reason this trade lost is so obvious, and it's actually one of those really depressing trades to lose because it led into a big winner. Now, I didn't take the winner, unfortunately, but I did manage to take the loss, which was realistically just not a good trade. The idea I had here was I was expecting the market to start reversing to the downside to tackle some of the kind of equal low liquidity that we have just here. So the target premise is 100% fine. We have an overextended movement. When we reached this high, we saw momentum slow down. Good sign. After a final drive to the upside, we swept above some liquidity, swing high liquidity. So when we started to break back down, I used what I call a risk entry to enter the position manually to target this low. Now, obviously, it started off looking okay. Realistically, the trade premise with a sweep of liquidity, dying momentum, clear liquidity target below, and an overextended movement, it seems fine. And the fact that we traded into an efficient range with this push down, basically this area here is the efficient range, which leads us to believe generally there is no reason for the market to reverse and react inside of this level, and the highest likelihood outcome is a trade to the downside. Now, I want to show you where I went wrong, and it's so obvious when we actually take a look at it. So this high was actually a sweep of liquidity. Okay, when we swept above a swing high, that's what gave me the confidence to start executing positions here to take the market lower. But this is where I say my kind of cockiness and excitement about the amount of money that I just made played a role in me going wrong on this position. Let's go over to the left. We can see where this swing high is. What do we have just above? A very clear supply zone at this level just here. So I don't trade the kind of FVG stuff that a lot of people are trading nowadays. I trade the traditional way of imbalances before FVGs was even created as a concept, which is I wait for imbalances to be filled. So this area here, which some people may see as an FVG, I see this as an imbalance. And rather than trading from it for the most part, what I should be doing inside of my system and what I do most of the time is wait for the actual supply to be retested and the imbalance to be filled, okay? So if we take a look at what I actually did on this trade then, well, I kind of broke my rules in that sense. Sometimes I will take trades from points of liquidity when they're very obvious. But when we look at this trade, it was so damn obvious that this imbalance was going to be filled. It's such a simple trade. And it was so easy to actually win this trade if I'd have done things right. Now, this is what the trade should have looked like. The entry should have been on this area of supply. The stop would have been above the high, and the target would have been at the same exact target. This, had I been clearly thinking, is exactly what I would have done. This is what a lot of my trades look like. But because I was on that kind of, I don't know, not FOMO, but overexcitement, feeling invincible, I thought I was so smart and tried to time the market and thought, I'll just get in here. This has got to melt. Well, you're going to see what happened. What we actually did was drive to the upside, pretty much perfectly stop out my trade and perfectly react to the obvious blatant trade that was just sitting there staring me in the eyes, which is obviously the sell from supply in line with the system, the things I teach and the things I usually do when I'm not messing up my rules. So there you can see it worked out perfectly for a 10% return from that high, but instead I just got stopped out for minus 1%, which, is not a great outcome for such a blatantly obvious and easy trade to take. So as we say, as traders, we're humans. We are always going to make mistakes at some point. Even AI makes mistakes. So humans are definitely not free from it. But we just have to minimize those mistakes, because turning a really easy 10% win into just a 1% loss is obviously not something we want to be doing a lot of the time. Fortunately, I'm pretty free from mistakes. I trade reasonably low frequency, so I don't get into losses a lot of the time. And I really don't get into mistake losses a lot of the time. But this is one of those ones that definitely hurt. It's probably my most memorable loss of 2024, because at this point in time, I could have been making a very big profit, 1 to 2 to 3 months worth of profit in a position in just a couple of hours. But instead, I decided to jump in too soon and lose the position. So there you go. What went wrong on this trade? Well, it was simply impatience. Impatience and thinking that I was smarter than my system. I'm going to get in here. We had the sweep of liquidity. It's going to move lower. My system tells me, don't do that. My system always tells me, wait for the imbalance supply to be hit, and then you've got a nice, simple, easy trade. My system was right, and I was wrong. The final loss to cover is this one here on gold. This was the first trade I took in 2024 on the 2nd of January. This was a very low time frame trade. So we're actually looking here on the 2-minute time frame, right? So super low time frame stuff. Now the premise for this trade was to ride this existing uptrend through towards an open area of imbalanced supply. For context, if we go over to the left, I'll just show you where that supply is. We can see we are trading currently inside of this range. And as all of my trades, really, I'm just targeting open and balanced supply and demand zones. This was a clear target considering where the market was trading on its way through towards this point. So we have a pretty clear uptrending market, as you can see, continually forming these higher highs and higher lows. We'd seen the market pull back down to this point, create a retest of demand. We then saw a second push away breaking there into a new higher high. So we pushed above this structural high. We created a new higher high here with equal high liquidity. This is an extra confluence as well. When we create equal high or equal low liquidity, we are oftentimes going to see that filled. So I would anticipate, therefore, the market is likely at least to lead up to this point. We can go break even there. Either it comes back down and we get stopped out for no loss, or it carries on through towards that larger target and we secure our full win. For the execution, after I saw this 2-minute demand zone retest and bullish push and bullish break of structure over this previous lower high in this internal trend, we then saw a clear demand zone that had kicked off the movement. There is now imbalance created by the current 2-minute candle. So I placed a buy limit on the demand. I put my stop under the low and I have my target up here for a potential 4.64% trade. Now, as you are going to see, if we play the trade out, we got tapped in and then pretty quickly the trade just collapsed and ended up getting stopped out, okay? So I got in, but then I got out probably within the space of around 30 minutes, and that was pretty much the trade done. It didn't work in my favor. Now, although it looks like a liquidation, I'm pretty sure it actually did just end up sinking through the rest of the day. So, what did I do wrong on this trade? Well, by my rules, by my system, I didn't do anything wrong on this trade. I've taken many trades like this that win, and I will take many more in the future that will win. I'll also take many more of these in the future that loses. So this is what I would call a systematic loss. I had realistically everything that I look for moving in my favor. I had an uptrend. I had the low time frame confirmation entry with the break of structure down here. I had the equal high liquidity as kind of an additional magnet target for price. We had an open imbalance supply zone leading us up towards our target up here, which creates high probability targets. And all in all, this trade, from the top-down process of high time frame into low time frame, along with the execution here, was a pretty much perfect trade. I'd be happy to take this trade 10 times out of 10. It would win about 5 times out of 10, and it would lose about 5 times out of 10. But with 4.64% potential return, we obviously are going to make a lot more money on the winners than we lose on the losing positions. So I wanted to highlight this loss to show you that not every single losing trade is a result of a mistake. Some trades are going to be perfect by the rules of your system and still going to lose. In fact, probably half of the trades you take will end up with a negative outcome, even if you've done everything right. This is why we want to minimize mistakes. If we're trading with around a 50 to 55% win rate when we're doing everything right, well then when we do things wrong, we bring in losses that don't need to happen, shouldn't happen, and we'll eat the profits of the winners that you take. So there are 2 losses that were down to mistakes in this video, and there is one here which was down to system following and just natural market flow, that sometimes trades are not going to go your way. But this trade was fine, and I would take it again 10 times over. Now, the important thing to understand about the losing trades we've just looked at is that they are all overwritten with a single win. You need to make sure you are trading with a positive risk-reward outcome so that you can take a trade like this and overcome 3 or 4 or even 5 losses. This is the way that I trade. So taking 1, 2 or 3 losses really doesn't affect me at all, because I know as soon as I take 1 win within my system, I've made all the money back and generally, usually plus more. So that is the biggest and most important lesson from this class. Make sure you're trading with a positive risk-to-reward expectancy and you'll be fine even if you take a few losses, which you are going to, I promise you that. So hopefully you've learned a thing or two from the losses that I've taken and also the lessons I've given you on how you can learn from your own losses as well. Don't just write losses off when they happen. They provide you with massive amounts of information that can help you to improve your system and your abilities to follow your plan. So that's it for this video. If you want to make sure you have a strong system to work with, check out the link in the description. It will take you to my free course to show you how to build your own trading system and become profitable this year. So thanks for watching. And if you don't want to check that out, there's a video somewhere on the screen. You're going to enjoy that one as well. So thanks for watching and I'll see you in the next one.